It is easy to make assumptions about what a mortgage process actually looks like. And let me tell you, there are a lot of myths out there. So let's set the record straight when it comes to all things mortgages. Can buyers over the age of 50 get a mortgage?
Yes, all lenders accept applications from these buyers. The only limitation is the mortgage term. Some lenders go to the age of 75 now, some even go to the age of 80, making it much more cost effective.
Is it true that you can only get a mortgage from the bank that you bank with?
Lots of people believe their existing bank is the only place to go when starting to look at a mortgage. This could be because of emails and letters that they receive, offering preferential rates and how much they can borrow. It is still wise to shop around. Let's not forget there are other banks that could match or better those rates. There are also non-banking organisations that could offer you a mortgage too.
Is it true that bills, debt and other outgoings won't affect an application?
So this is not true, and any monthly outgoings will be considered in the application to assess mortgage affordability. This includes grocery bills, utilities, car finance, credit cards and student loans. All of these general expenditures will help the lender to assess your disposable income. Lenders will also conduct an assessment of your finances in case of a change in circumstance, assuring them and you that the mortgage repayments would always be made.
Is it true that you need a perfect credit rating to get a mortgage?
It's certainly true that you may struggle to get a mortgage with a bad credit history, but by no means will your credit score need to be perfect. Getting a mortgage can be difficult if you've got bad credit history, but it's not impossible. Some mortgage lenders offer adverse credit mortgages, specifically designed for people in this situation. However, there is a difference between adverse credit, for example like missed loan payments or county court judgments, compared to no credit history at all, which might be the case if you've never taken out credit or loan.
I often hear there's no point in looking for a mortgage until I have found my new home.
So this is a mistake for two reasons. Firstly, by talking with an advisor beforehand, you'll be able to get a realistic picture of what you can afford to buy, giving you your budget. Secondly, you can get yourself a mortgage agreement in principle, known as an AIP. Even though these are time limited, they act as a provisional agreement between you and a lender, and means things can move much more quickly should you have an offer accepted on a house you love.
Whatever your situation, find your closest Taylor Wimpey development to get free financial advice from an independent financial advisor to understand the options available to you.